This is a very narrow market. Once again, we have very negative breadth in kind of the market itself. Market breadth is declining across small caps, mid caps, large caps as well. Pretty much you dig into any sector outside of technology, discretionary, and communications, which are the ones that own the mega cap 7 stocks. And again, discretionary is Amazon and Tesla. So those two have been on fire as of late. But that's why the market looks like it's doing great, but in reality, the market's not doing great. Let's talk about what you need to know before the bell this morning. The stock market hitting, near all-time highs again. We've talked about this kind of consolidation process that we've been here, for the last, kind of week or so. Market's not really going, they're not going down, they're not going up, but that's that distribution phase that we talked about. And so now the market's kind of getting set up for potentially the Santa Claus rally. That's all the portfolio rebalancing, window dressing for the end of the year. But this story is not the story of the whole market. Let me show you something real quick. So this is the S&P. Looks great, right? Fantastic. All right, let's take a look at basic materials as an example. Ain't nothing good going on in basic materials. Here's your economy. Right? So if the economy is firing on all cylinders and we're growing at 3.2% real, basic materials should be doing much better. They're not. Let's take a look at industrials as an example. On the other side of industrials, of course, industrials is all the people that are working in the industry, producing stuff. Not a lot of good data coming out of the industrial sector as well. How about financials? Of course, they had a big run earlier this year. Those have been kind of weak here as of late. We're seeing a bit of a pullback there, so not as surprising. But energy, of course, a main component of the entire economy, tells you another story entirely. Oil's been, energy stocks under a lot of pressure here just recently, coming back to retest some of the lows we've seen this year. Very oversold, by the way, on the energy side. If we get down into, of course, staples, this is stuff that people consume. Really not a lot going on here. Very stable at the moment, but weak. And we're not seeing really kind of the same activity on the staple side that we're seeing in other sectors of the market. Utilities, of course, this is what people consume. Been under a lot of pressure here. Here's the point of the story, is that the only reason the markets right now are trading at all-time highs is they've got to own one of the Magnificent 7 stocks. If it's communications sector, it's Google. If it's in the discretionary sector, it's Amazon. Discretionary is doing fantastic. If it's in the technology sector, of course, it's Apple and NVIDIA, and those stocks are doing just fine. So again, this is a very narrow market. Once again, we have very negative breadth in kind of the market itself. Market breadth is declining across small caps, mid caps, large caps as well. Pretty much you dig into any sector outside of technology, discretionary, and communications, which are the ones that own the mega cap 7 stocks. And again, discretionary is Amazon and Tesla. So those two have been on fire as of late. But that's why the market looks like it's doing great, but in reality, the market's not doing great across all sectors. It's a very, very narrow market. So if you own the index, you're doing just fine. If you're invested in other areas in your portfolio, if you own energy stocks, if you own discretionary, staples, utilities, real estate, those have all been under a tremendous amount of pressure here over the last few weeks. Lots of distribution in those areas, money rotating from those areas into those Mag 7 stocks. But again, this is something we talked about earlier this year. I remember back in the summer, I wrote an article talking about Magnificent 7 stocks aren't dead, and everybody, this is what they assumed during the summer. We had this big rotation to other areas of the market. And it's like, oh, Mag 7's dead. And of course, I said, no, going into the year, Magnificent 7's where you want to be, because that's where your stock buybacks are. That's where your earnings growth is. And most managers were very underweight those stocks in their portfolios. So they've been having to bid those up in their portfolios, sell other stocks to get those weightings up in their portfolio for year end. So that's really what's going on here. But again, watch that breadth in the market. That's something that tells us generally we're getting ready probably in the second month of next year, January, February, likely going to see a 3 to 5% correction in the market. So again, just be aware of that. That's what you need to know before the bell this morning.